we are seeing a slower pace of rent growth today.
So what are the biggest trends you're seeing currently in the Australian housing market?
If you're trying to get into an investment at a more affordable price point, Melbourne's the only game in town at the moment.
Do we anticipate there's going to be more people getting driven out of the market in 3, 6, 12 months' time?
The short answer is maybe a little unsatisfying, which is...
Welcome to Own It, your property partner. Open chats about property, money, and everything in between. I'm Adam Schall, founder and owner of Locale Property Group. Today we're recording on the land of the Whadjuk-Noongar people. And so in today's episode, we're joined by Angus Moore, an economist from the realestate.com group and previously an economist at the Reserve Bank of Australia. Today we're talking to Angus Moore, economist from realestate.com group. Previously, he was an economist at the Reserve Bank of Australia, and we're going to be talking about property market updates across Australia. All right, we're super excited to have Angus Moore, senior economist from realestate.com's prop track. Previously experienced working with Alphabet and economist for the Reserve Bank. So welcome and thank you, Angus.
Thanks for having me, Adam. Great to be here.
So what are the biggest trends you're seeing currently in the Australian housing market?
Yeah, I think it's a really interesting time in Australian housing markets at the moment. And the reason for that is we've kind of come through a really interesting time and we're sort of coming out of that now. And so we're sort of in a transition period. And to explain what I mean by that, the last few years, basically since the RBA started raising rates in 2022, has really been kind of a divergent market across Australia. On the one hand, we've had Sydney and Melbourne, where prices have been pretty soft. Melbourne especially, prices are actually lower today than they were in early 2022. So, really quite soft. But even Sydney, price growth's been pretty slow. So on the one hand, they've been quite slow. And then on the other hand, we've had, Perth, Adelaide, Brisbane, and some regional markets as well, where we've been seeing really very strong growth, even despite the fact that interest rates have risen very, very rapidly. That divergence is looking like it's closing now. We're starting to see Sydney and Melbourne growing. They're not growing particularly quickly, but it is solid growth. We are seeing them consistently post growth this year. And at the same time, we're starting to see the pace of growth out west and, in Adelaide and in Brisbane start to slow down. And so instead of seeing that sort of, divergent, fast-growing smaller capitals, slow-growing larger capitals, we're starting to see kind of one market across Australia characterised by slow, consistent growth.
Cool. And are you able to share some, understandings on the Melbourne markets and Sydney, New South Wales markets? Why have they sort of underperformed in the last few years versus the smaller cities, obviously the Adelaides and the Perths performing really well?
Yeah, it's a story that really kind of spans the last 5 years in terms of why we've seen that divergence, though it has been more notable in that sort of post-pandemic period. And it really comes down to two things and kind of two phases. One is coming into the pandemic, those smaller capitals were relatively affordable compared to what we were seeing in Sydney and Melbourne. Not the case today for reasons we'll discuss in a moment, but coming into the pandemic, Perth in particular had a very soft decade post-mining boom. And so actually by 2020, with rates at record lows, prices there looked really quite affordable. So that was sort of the initial kick up. Then at the same time, what we saw was a lot of interstate migration, particularly out of Melbourne, canonically, during the pandemic into other states, but also out of New South Wales. New South Wales has always seen people leaving it for other states, but that was even more true during the pandemic and in some of the years since. So that's then been a big driver of housing demand in those smaller capitals as people have left Sydney and Melbourne and looked to buy in other parts of the country. Perth notably been seeing inflows from other states after seeing outflows during the 2010s. The reason we're starting to see that process converge, price growth converging, is that's starting to slow down. Melbourne's now back to sort of balance. There's about as many people leaving as there are coming in. Sydney's still losing people to other states, but it is, more like what was typical pre-pandemic and less so than it was during the pandemic. And while Brisbane and Perth are still attracting people, it's not as strong as it was. And so that's also starting to see a slowdown.
When do you predict the migration, for Western Australia, Perth specifically, and Queensland with Brisbane, those migration numbers to sort of stabilise? And when would you see or anticipate to see Melbourne and Sydney numbers, to stabilise and potentially improve?
Yeah. I think we're starting to see it already. Net interstate migration, it's still elevated into Western Australia and into Queensland compared to what was perhaps typical, over the last 2 or 3 decades. But it has come down from what we were seeing during the pandemic. And then if we think about overseas migration, which we haven't spoken about thus far, but is obviously important as well, particularly in rental markets, that's starting to normalize as well. We saw a big surge in migration, in net migration, after borders reopened. And there's obviously been a lot of ink spilled about this, but part of the story there was a bit of a snapback from borders being closed. It wasn't actually that we were seeing a lot of people coming in, though, we were. But what was driving really strong net migration was the fact that no one was leaving. Typically, what we see is both people coming in and people leaving. And those people leaving are often people that arrived a couple of years earlier, to say, study a course. And obviously, during 2023, no one had arrived a few years earlier, so there was no one leaving during 2023. That's largely washing out now. We're getting back to a more balanced pace of net migration. So we are starting to see population growth slow down now compared to what was true over the past couple of years.
In relation to migration, international migration, potentially into Melbourne and into Perth, what are those? Obviously, Melbourne's more of an educational-based migration. Obviously, a lot of industry there, and obviously Perth attracts obviously mining industry. Do you have any data on insights on those?
Yeah, the short answer is, we are still seeing relatively strong migration in the data that we have up to date, but it is starting to slow down from that really big kind of post-border reopening surge that we saw. And that's, as we'll maybe talk about in a bit, that's starting to flow through into what we're seeing in housing demand as well, and in rental demand, where both are starting to cool down, which is part of why we're seeing home price growth slow down. It's part of why we're seeing rental demand slow down a little bit as well.
And it's a good segue. What are you seeing, I guess, in the rental markets nationally? And I guess we can talk independently with each state.
Yeah, look, not good things, unfortunately. Though there is a silver lining. Economists are often accused of being dismal, so I won't be all negative. But look, rental markets remain really very challenging. Rental vacancy rates around the country are still very, very low at the moment. I will cheat and pull up some numbers because I have trouble remembering them off the top of my head, but in the most recent data that we have, which is for August, rental vacancy rates across capital cities were 1.4% and across regional areas 1.3% on average. Very, very low. To put some context around that, we would consider sort of 2 to 2.5 more like a typical normal period. That's sort of what we were seeing in the lead up to the pandemic in the sort of late 2010s. A bit higher in some areas, a bit lower in others. So that sort of below 1.5 is very tight conditions. To kind of whip around the country a little bit at the moment, in Sydney, it's 1.3, in Melbourne, 1.7, Brisbane, 1%, Perth, 1.1. So we are still seeing kind of right across the country, very, very tight conditions. It's not, just some parts of the country where this is true. The silver lining, to be a little bit more positive, is that it is a bit better than what we were seeing kind of during the depths of the rental crisis in, late 22, 23 and into early 2024. Kind of put some context around it, Perth got as low as 0.6% in late 2022. So while, low 1% is not a good outcome, it is better than where we were.
And I guess over the last quarter, last 6 months, where are we seeing those vacancy rates? Are they sort of slowly trending up, or is it fairly stable?
It has been trending up a little bit. Vacancy rates are obviously quite volatile month to month because it depends on, when people move out, when new builds hit the market. So, it is hard to kind of read too much month to month. But if we look over the last sort of 12 to 18 months, they have, broadly speaking, been trending up. In capital cities, regional areas, it's maybe a bit harder to see that trend. Regional areas remain really quite tight. They are obviously much smaller, thinner rental markets. So, there is just less availability in general. And, we've seen a lot of that availability get absorbed by people moving from cities to the regions during the pandemic and the years since. So, unfortunately, things still pretty tough in the regions.
And for West Australia specifically, there's been a very constrained construction pipeline. Is that an issue nationally? And how are we seeing I guess, building approvals and commencements and completions? Is that keeping up with demand currently across the market or across the nation? How's that performing?
Yeah, the short answer is it's a challenge everywhere. Perth's not unique there, though Perth has maybe seen some more acute shortages in some areas than other parts of the country. Though, again, I wouldn't want to make too much of that. It really has been a nationwide story. If we think about the new homes market, it's really been facing kind of three challenges that have kind of all come together over the last 5 years. So one is just the difficulty in sourcing raw materials, and the cost of those raw materials has increased enormously. That was really a story during the pandemic. The sort of, again, silver lining there is we're not seeing as rapid increase in building costs as we were a few years ago. Costs haven't come down, but they're not kind of growing as quickly as they were. So that's been the first challenge. The second is the fact that it's been very hard to source labour. We have seen a very, from a macroeconomic perspective, good outcome on the labour market. Unemployment's very low, but it does make it hard to find labour. And, in many states, maybe perhaps less so in Perth, but in Sydney and Melbourne, there are large infrastructure projects going on that is sort of absorbing up some of that labour that might otherwise be available to the residential construction sector. I always like to joke, these are not perfectly substitutable. The WestConnex here in Sydney, it's not a lot of kitchens being built there, and equally not a lot of big, highway tunnels being built in my kitchen. But there is obviously some substitutability between the labour that's used in those projects. And so that has made it challenging for builders. The third kind of challenge that builders have been facing is it's just taking a lot longer to build homes than it used to. And that's obviously related to those first two challenges, but it is making it very challenging to deliver homes.
Yeah, 100%. I agree. Markets like Melbourne, obviously been underperforming for some period of time, poor sentiment, and we had a very similar situation here in WA post 2015, and we would have seen building approvals drop quite significantly, and I anticipate Melbourne's probably done the same. Their building approvals have dropped, and now they're starting to see migration stabilise, and the market's starting to perform better than what it was. Do you see Melbourne potentially creating more of a shortage based on shortage of building approvals and starts?
Yeah, it's a great question. And I think it's one I get a lot. People kind of look at Melbourne's underperformance over the past few years. And, I like to put some numbers around this. Since the start of the pandemic, so, a little bit over 5 years at this point, Brisbane, Adelaide and Perth, prices are up sort of 90 to 95%. So, between friends, we can call it doubling in 5 years. Melbourne, 20%. It's a wild divergence. And what it means is Melbourne looks really very affordable compared to other parts of Australia at the moment. Not affordable in absolute terms, given how expensive mortgages are, given where rates are at, but relative to other parts of the country. That doesn't feel sustainable over the next decade. I don't think it means that we're going to see Melbourne take off in the next 1 or 2 years. There are obviously some real headwinds for Victoria as a state economically, but over the next decade, it is hard to see the state of affairs where Melbourne is, on some measures, cheaper than Adelaide, despite being 4 times the size and higher income. That kind of has to correct over the next decade or so.
And obviously we saw Melbourne and often Sydney's sort of prices somewhat pegged together. Obviously there was a disparity and Melbourne's always more affordable. But is this, I guess, looking back at your data, is this probably a fairly unique window that we've seen with a disparity that's been created between Sydney and Melbourne?
Yeah, I mean, obviously we've gone through lots of periods over the last 5 decades in which, one or other cities has been outperforming, but the extent of Melbourne's slowdown and kind of underperformance in the past 5 years is really quite significant, even relative to Sydney, which, hasn't seen as strong an outperformance as say, Brisbane, Perth, Adelaide. So, is it the biggest divergence we've ever seen? Probably not, but it is quite notable.
So touching on vacancy rates, obviously they're incredibly low. What's that mean for a first-time buyer trying to enter the market currently, maybe getting out of renting and getting into their own home?
Yeah, what it means is, sort of second round for a first-time buyer in that, they're probably renting at the moment. And what they've seen is the rents that they're paying go up enormously over the past few years because vacancy rates are very low. It's very competitive to find a rental. To kind of put some numbers around that, we'll pick on Perth for obvious reasons. And let me pull my numbers up so that I've got them here. What am I looking at? In 2022 alone, so that 12 months, rents across Perth were up 14.5%, which is eye-watering growth. When you consider, rents normally grow something in line with inflation, so sort of 2.5% in that order. 2023 was even faster, 16.5%. So we've seen incredible increases in rents, and that's obviously making it much harder for first-home buyers to save up a deposit because they're paying a lot more in rent than they were. Again, the good news is we are seeing a slower pace of rent growth today, consistent with that sort of slow improvement in rental vacancy rates that we've seen. It's still pretty quick. Perth's still up 6% in the past year, which is still faster than we would consider typical, but it's nothing like the sort of eye-watering growth we were seeing a few years ago.
And I guess that came from a very low base of Perth having probably pent-up demand over a long period of time and obviously an underperforming market for half a decade, essentially. What are we seeing the knock-on effects? Obviously, that's then probably when people, I guess, rents are becoming somewhat unaffordable and people look at purchasing their own property. It seems more attractive because essentially often it's not that much more expensive than renting. Is that then driving the lower part of the market? What are we sort of seeing currently?
Yeah, we are seeing a bit of first-home buyer activity as a result of this. People sort of looking at the rents that they're paying and deciding, for those that can, and of course not everyone can, to jump out and try and get into first-home ownership. We're not seeing the sort of levels of first-home ownership, number of first-home buyers that we were, say, during 2020, 2021, when rates were really, really low. It's obviously just a lot harder to get a mortgage today and buy a home today than it was a few years ago, both because rates are much higher and therefore borrowing capacities are lower, and also because prices are a lot higher. As we've discussed, they've nearly doubled in Perth over the last 5 years. And so, that's ruled out a lot of homes that first-home buyers might have otherwise been able to purchase.
So how have housing prices moved in the last 6 months nationally, and what do you anticipate to see for the next 6 to 12 months?
Yeah, as we were sort of chatting around at the start, that the trend over the last sort of 6 months or so has really been one of convergence, where we're kind of seeing slow but steady growth around the country. To kind of put some numbers around what I mean by slow and steady and around the country, the fastest growing part of our country, start that one again. The fastest growing part of Australia is still Perth, still the fastest growing capital city. But in the past 6 months, it's up 5.5%. That's solid, but it's not the sort of pace that we were seeing a few years ago. And that compares to, Adelaide, 4.7%, Brisbane, 5%, pretty similar. Sydney, 3.3%, so a bit slower, but not massively so, and nothing like the divergence that we had been seeing. And then, Melbourne's still the slowest performing, but again, it's around 2%. So again, it's not that massive divergence that we had been seeing. What we're seeing really is just sort of slow, consistent growth around the country. And that's largely on the back of the fact that interest rates are now falling, and that's starting to boost borrowing capacities.
And do we, obviously there's a lot of speculation around interest rates, and there's obviously multiple markets performing at different levels. What are we sort of anticipating from a Reserve Bank point of view with interest rates? Do you think we're going to hold, or do you think we'll see further cuts?
We've probably got another 2 cuts, I think, is my expectation at this point, though, there is a lot that can change in that regard. The big one's obviously inflation. Inflation's been driving basically all of the movements that we've seen from the Reserve Bank. It got way out of control. That was why we saw rapid increases in interest rates in 2022 and into 2023. That's mostly behind us now. Inflation is back in the RBA's target band, depending on how you measure it, but, sort of broadly looking through the volatility, it looks like it's back in, and the RBA is expecting it will stay there. They're not fully convinced the job's done. There's still some risks that it's a bit higher than they want it to be. So that's where there's a bit of hesitation around how much further we'll cut and how fast we'll see those cuts. But I think the fact that we're heading in the right direction means there are more cuts to come.
So we've recently seen Anthony Albanese drop his first-home buyer deposit scheme, which is going to launch on the 1st of October. We also have Keystart here in Western Australia, which is government-backed lender, which is pretty incredible, offering a 2% deposit to get into the market, and they've increased their property caps. We've seen interest rates dropping as well. So we are seeing the market being fueled in that first-home buyer space. Obviously, affordability is still that challenge. What do you anticipate you're going to see from the first-home buyer deposit scheme nationally? Do you think that's going to drive property prices, I guess, within those property caps?
Yeah, it's a great question. And, I think maybe even taking a step back, the reason we're seeing a lot of these deposit schemes is there are 2 hurdles that first-home buyers face. One is that deposit, which is much more challenging today than it was 3 or 4 decades ago, substantially larger relative to typical incomes. But the other hurdle is what we often call affordability, or mortgage serviceability, which is how much can you borrow and what can you buy with what you can borrow. And at the moment, that's actually a big constraint for a lot of first-home buyers. With rates as high as they are, with prices where they're at, even with a 5% deposit, not a lot of homes across Perth are going to be affordable for a first-home buyer. The sort of numbers that we put together is a typical first-home buyer. So you think a 25 to 39-year-old renting currently, their average income or typical incomes in the order of 125 to 130,000, differs a bit across the states, but in that order, they can afford to service the mortgage on about 15% of homes at the moment. Now, that's under some conservative assumptions about affordability and serviceability. People can probably stretch to more than that, but there are not a lot of homes that are affordable on current incomes. So even with that deposit wave, even if you don't have to save that 20% deposit, you can get that 2% or 5% from the government. It is still a big hurdle. The good news is, though, as rates are coming down, that is going to start to change that picture. It has already changed that picture a little bit. We're not going to get back to the sort of levels we were in 2020 when rates were at record lows and before prices nearly doubled in Perth, but it is going to help.
So if there's someone, I guess, sitting on the sidelines, and like you said, income is a real challenge. Obviously, we work with first-home buyers on an everyday basis. We anticipate property prices are still going to be increasing, not probably what they were in the last 5 years, but we will see ongoing growth. And like you said, there's a limited amount of properties available in those affordable areas. Do we anticipate there's going to be more people getting driven out of the market that probably that were potentially have access to the market currently and may not have access in 3, 6, 12 months' time? And what would advice be for those first-home buyers?
Yeah, it's a good question. I sort of always demur a little bit on giving advice to first-home buyers because it's hard enough to make my own decisions about where to live, let alone make them for other people. I think, my philosophy here is always that it comes back to what makes sense for you in your life stage and where you're at. And really that's probably more important than buying now or in 3 or 6 or 9 months' time. To come back to the sort of broader part of the question, though, we are still expecting we're going to see price growth, even in that environment at very challenging affordability. And the reason for that is that rates are coming down. But as you say, we're not going to see the sort of pace of growth that we were seeing in 2022 or 2023. We're expecting solid, consistent, but perhaps unspectacular growth over the next 12 or 18 months. And the good news for first-home buyers is, wages are growing, unemployment remains low. So, those are favourable conditions, particularly for younger households who often bear the brunt of downturns in the labour market. So there are still some silver linings here. And
from your perspective, do you see potentially in 2, 3, 4 years' time from a Western Australian economy and a broader Australian economy, are there any headwinds that we anticipate on the horizon?
There's a big one, and it's maybe not so much a headwind as an uncertainty, which is kind of the global macroeconomic outlook and trade policy. There's obviously a lot of noise and a lot of changes being proposed in trade policy from the US at the moment. To date, that hasn't necessarily impacted us in a first order way so far, but there are a lot of risks in how that could play out. And the other point is just the uncertainty of all of these potential changes is going to have impacts on the economy. We know that even if policies were to end up back where they started, the fact that it's been so uncertain is going to lead businesses, firms to delay investment and hiring decisions because they'd prefer to wait and see how things play out before they commit to something that's difficult to reverse. So you're already seeing that in business investment. Business investment is looking a bit sluggish at the moment. I think that remains a risk to date. That hasn't translated into unemployment. Job losses remain low. Unemployment remains low. But it's certainly a risk and certainly something the RBA is keeping an eye on. They would respond if that were to eventuate.
With business, stalling, how are we seeing wage growth? And obviously, we've seen significant growth from a property point of view and a price point of view. How have wages kept up with that?
Yeah, the short answer is we haven't seen them double in the last 5 years. So they certainly haven't kept up with that in that sense. But we are starting to see some reasonable wage growth at the moment, certainly relative to what we were seeing in, say, the late 2010s when wages were really quite soft. Past year, the sort of best measure we have of wages, which comes from the ABS, is that they're up about 3.5%. So, and that's fairly solid growth historically. It is, pleasingly faster than inflation too now, which, wasn't the case a few years ago when inflation was running much higher. So that's helping ease the cost of living, though, it is still a small gap between inflation and wage growth. It's certainly not going to be radically changing the game for anyone, but we are seeing some wage growth there.
Great. And from a Western Australian economy point of view, obviously we're heavily dependent on the mining industry. Currently that's performing well, and there's significant projects in the pipeline. But any predictions on what you see for the WA economy? Obviously we had some pretty challenging times from 15 to 20, and we had a pretty serious mining downturn there. What's your prediction? What's on the horizon?
Yeah, look, I will steer clear of forecasting iron ore prices because even whole teams at the federal government managed to get that pretty wrong from time to time. And having been in those teams at time from time, it's a hard problem. But yes, obviously, mining makes a big difference to the Western Australian economy, far more so than other parts of Australia, and really is the story of Perth's housing market for the last 2 decades. We saw that big boom during the late thousands and into the early 2010s, big downturn thereafter as the mining boom kind of faded. And then, obviously it's been picking up more recently, both because of the relative affordability coming into the into 2020, but also the fact that, the mining sector has been picking up. terms of where we go from here, I'm kind of going to punt a little bit and say it is really uncertain. A lot depends on how US trade policy plays out, what impact that has on China, and that's very hard to forecast because we basically don't know where that's going to go.
Absolutely. From your perspective, diversification in the West Australian economy, have you seen much diversification with industry businesses coming into Western Australia? Obviously, we have a lot more migration, positive migration, which is great into Western Australia. What's the knock-on effects of that positive migration in Western Australia? Will the economy become more diversified and, I guess, more resilient for a potential downturn in commodity?
Yeah, it's an interesting question, and look, probably a little bit outside my area of expertise because I'm a housing economist, not an industry expert, but always happy to throw in a view. And economists always have three views on any question. I think the kind of key impacts from that migration, from my perspective, have been in the rental market and in the housing market, where we've just seen enormous increases in demand for housing as a result of that interstate migration, and that's driven, as it did back in the early 2010s. Rapid increases in home prices, rapid increases in rents. In terms of whether WA is as leveraged to the mining boom as it was, a decade and a half ago, I think it's hard to say. Certainly, state government revenues are still very heavily dependent on mining, though that's not necessarily a bad thing. In some ways, Victoria, it very much has the opposite problem in that it doesn't get revenues from mining royalties, and they're really struggling to raise revenue and instead raise much more revenue than is true in WA from stamp duty, which is a very, very inefficient way to raise revenue. So it is a bit of a double-edged sword there.
Love to talk a bit more about Melbourne. Obviously, they have different ways of raising revenues, and we saw land tax and obviously implications of land tax and sentiment. I guess broader overview on government policies there and the knock-on effects with property, and do we see any, I guess, the property tax is just normalising and the market just rebounding? What's your predictions there?
Yeah, it's an interesting one, what we're seeing in Melbourne. The short answer is, and we haven't spoken much about investors yet, but we're seeing a lot of investor participation around the country at the moment. In places like WA, South Australia, Queensland, the share of purchases being made by investors at the moment, so that is, any given buyer, what's the probability they're an investor? Close to record highs. New South Wales, around the highest we've seen in a decade, give or take. And the same just is not true in Victoria. We just have not seen a pickup in investor activity to anything like the same extent we've seen in other states. And while that's not entirely due to policy changes, and in particular here the land tax changes on investors, certainly part of the story is that. The other part is that Melbourne hasn't seen rents increase as much as other parts of the country. So it's maybe, and rental vacancy rates are not as tight. So it's maybe not as attractive for investors, but certainly you can't rule out policy as part of the story.
I guess in the last look, I personally have just purchased a property in Melbourne. I do see it as a market that will eventually recover, just based on how incredible the city is, the migration, and obviously the diversity within the economy. But I've obviously been on the ground recently trying to purchase, and I'm up against quite a few people bidding from New South Wales, Brisbane and Western Australia, and it seems to be like all the interstate people are purchasing the properties or some of the properties in Victoria now. Is that something that's sort of just starting to happen in the Melbourne market? Obviously, we had a very similar situation here in Perth, probably in 2020 and just post that, where probably 50% of the properties were being bought by East Coast buyers. Is that something that's going to start fueling the market? And I know buyers agents are all over Melbourne right now. Do you see that, I guess, driving some of the market and some of the sentiment?
So I'll give you the bad answer and then the good answer. The bad answer is it's actually surprisingly hard to know. We don't get very good data on where buyers are coming from, basically because the sort of best data we get on investor activity comes from the banks, and it's based on where the collateral is located, not where the buyer is located. So we in some sense don't know. That's only a part answer to the question, though. There are some ways we can get at it. And the short answer is we probably are starting to see that. And it makes sense when you think about the relative affordability of Melbourne compared to other parts of the country now. If you're trying to get into an investment at a more affordable price point, Melbourne's kind of the only game in town at the moment. It is just markedly more affordable than other cities around Australia, particularly relative to the incomes in Melbourne. That doesn't necessarily mean we'll see prices take off in the next 12 to 18 months. There are real headwinds for the Victorian economy, but over the next decade, it is hard to see how Melbourne stays more affordable than somewhere like Adelaide, given that it is much larger. It's a high-income city. It is potentially our largest city soon, currently second largest. That state of affairs doesn't seem sustainable.
So which areas are you seeing are getting the most price growth? And that could be from an owner-occupier point of view and investor point of view. And which ones are cooling off across the nation?
Yeah, I think the story, as we've kind of been talking about with the cities, even when we look within our cities, we're seeing sort of more of a consistent convergence rather than big divergences like we were seeing during the pandemic when, some of those more lifestyle areas were just seeing eye-watering rates of growth. At the moment, the pace of growth across our cities, within our cities, is a bit more consistent. If I was trying to find a trend to point to, it's probably still, as it has been for the last sort of year or two, that the more affordable parts of our cities are doing a little bit better. Places like the Southwest in Sydney are doing a little bit better than the more expensive North Shore, but they're not massive differences. So maybe not as much of a diverging story as was the case, a few years ago.
So what are you seeing currently with people potentially moving, potentially making a sea change or a tree change just based on affordability? Is there any data around that?
I think there's two trends I'd point to, and one's kind of a bit of an old trend now, really. It's kind of a sort of 2021, 2022 story, which is that people want bigger homes. We saw during the pandemic people wanting to have an extra bedroom, and it makes sense if you're working from home, having that extra bedroom is really valuable. That's not a new trend, but it's persisted. We haven't seen that kind of extra that people are willing to pay for an extra bedroom or a larger home compress again. That tick up in premium that we saw during 2021, 2022 for larger homes really has persisted today. And that's also been part of the story for why the smaller capitals have performed better than Sydney and Melbourne. They just do have larger homes. And if you want a larger home, that is often where you have to look. The other trend that we've been seeing, and this is a more recent one, and really in the environment of rapidly rising rates, has been that more affordable areas have been a bit more attractive for buyers. As we've seen borrowing capacities come back, people have been looking a little bit further out of the cities in more affordable areas to try and defray that kind of affordability challenge.
Any predictions? Obviously, the affordable areas are performing incredibly well, and it's often based on necessity. Like I said, people don't want to compromise on a family home, which makes sense. Obviously, the outer areas obviously perform really well when the market's going well. Do we see any predictions of those areas potentially coming off, or is there just absolutely too much demand and just not enough housing supply to see that come off at any point in time?
Yeah, to date, we haven't really seen it come off. Everywhere's seen, particularly in Perth, Adelaide, Brisbane, we've seen a slowdown in the pace of growth, but certainly they haven't gone backwards. And we are still seeing relatively strong demand for that, which makes sense. While rates have come down, affordability is still very challenging. So it is still the case that people want, if you want that larger home and are budget constrained, as most people are, you're going to have to be looking in some of those more affordable areas. And, increasingly, and related to that sort of shift towards wanting bigger homes, to the extent that people are working from home, even just 1 or 2 days a week, it does make the cost of commuting that little bit lower. And so living further away is perhaps not as inconvenient as it was, 6-7 years ago.
And from a data perspective, what are you sort of seeing? What are those trends of a larger home? Is it people wanting a 3x2? Was it a 4x2? Are there any sort of block sizes that people are sort of leaning towards?
The short answer is maybe a little unsatisfying, which is just yes, just bigger. So, what we saw was the premium for a 4-bedroom over a 3-bedroom increase, for a 3-bedroom over a 2-bedroom increase, for a house over a unit increase. So it's not just specific to one particular type of floor plan. It's really just that extra bedroom that people want, and whether that's at the largest end of the spectrum, going 5 to 4, or at the sort of 3 to 2 in the apartment, all of it. We've seen that increase in premium.
And have you seen greenfield development, sort of housing, standard sort of single dwelling housing, perform better than unit developments or just, apartments in the last few years?
So we saw a really big divergence in prices for detached and higher density during the pandemic. Very, very substantial gap opened up, which again is, kind of very much related to what we're talking about here in terms of people wanting bigger homes and being less tied to inner city areas, both of which favor detached houses over apartments, which tend to be built closer to the city. That's been less true in the past couple of years. We've seen sort of more similar price growth over the past few years for detached and higher density. That premium that opened up during the pandemic hasn't closed. Certainly units remain relative to what they were 6 years ago, more affordable compared to detached houses. But we kind of haven't been seeing more outperformance from detached in the last few years.
Great. So are we seeing, I guess, of what we've seen on the ground here in Western Australia, only more recently we've seen the inner ring start to perform, I guess, as well as the outer ring areas, just based on affordability and the sheer demand in those areas. We're seeing that nationally, and is that just a bit of a trend at the moment that affordable housing in the outer areas are going to be always pretty much in demand based on affordability from a rental perspective, but also a purchase perspective?
Yeah, I think that's probably a confluence of two trends there. So one, as you say, is affordability. That's clearly an important driver of dynamics in housing markets at the moment, given how challenging affordability is. But I think the other, to the extent that we're seeing some demand for, say, units in inner city areas, part of the story there is the really strong participation from investors that we're seeing at the moment. In WA, about 40% of new loans are being issued to investors at the moment, which is a very high share and certainly much higher than has been true over the past sort of 15 years or so. Investors, it would be exaggerating to say left WA during that downturn, but we're certainly much quieter in WA during the late 2010s. Which makes sense given what was happening in housing and rental markets at the time.
Have you seen any generational differences between like Gen Z, millennials, and obviously some of the Gen X and the baby boomers? What are their preferences with housing? You'd love to hear some feedback.
A much harder one to answer. We the data that we have don't tend to break out to that level. I think to the extent that we can talk about that issue, really it comes down to the aging in our population, which is not a 1, 2, 3 year trend. It's a trend we've been seeing over 3 decades and will continue to see over the next sort of 3 to 5 decades. And why this matters is, as the population gets older, as we move into being an older population generally, our housing needs will shift. Older households tend to be smaller. Most are 1 or 2 person households, and so we just don't need as large a home. Though we still largely build big detached homes in typically greenfield areas, that still accounts for a lot of the homes that we build, particularly in places like WA. And so, to the extent that not something that's going to matter over the next 1, 2 years, but will matter over the next 3, 4 decades, we will probably have to start building a different type of home to accommodate that older population.
We're seeing a fair bit of multi-generational products and homes being built. Is that a bit of a trend that's happening currently? And to sort of dovetail into that, obviously we've got a lot of migration from international people moving into Australia, and often they are a bit closer with their family and live with their families. Are we seeing a bit more of a trend of that, of multiple sort of generational homes and living?
Yeah, unfortunately, another really hard one to get data on. Basically, the only data we get on multi-generational living it's consistent, large-scale data that we get come from the census, which we do every 5 years, and the last one was in 2021, which is quite a while ago now. So hard to actually talk much about, kind of month-to-month trends in multi-generational living. But, if you think about the broader trends at play at the moment, affordability is very challenging. That's obviously going to keep people at home for longer because it is just very hard to find a rental, very expensive to afford a rental. So, we would expect to see a bit more of that as household formation slows down because of the cost of renting.
Do you have any data on what's motivating sellers right now? Why are people bringing homes to the market? Obviously, it's very much, in Western Australia anyway, there's very low stock. But what's the trends of people bringing things to market? Is it because you get out of the market and cash in, or is it upsizing, downsizing? Is there any data or any trends around this currently?
Yeah, the short answer is there are, and it's quite interesting actually. One of the things we've seen over the past few years is that recent buyers, so those that bought in sort of 2019, 2021, have been selling a lot faster than earlier cohorts of buyers. So we've been seeing people kind of cashing out much faster. And so the share of homes that are being maybe not flipped is too strong, but sold in quite a short period of time has been higher than is typical. And the areas that we've seen that have been the areas that have seen really strong price growth, places like Perth. And so that's consistent with people sitting on big equity gains, unsurprising, in an environment in which prices have nearly doubled in 5 years, and looking to upgrade. And we can see that in lending data as well. The share of loans that at least 12 to 18 months ago, it's maybe a little less true now, but 12 to 18 months ago, the share of loans that were being made with quite large deposits, so as people with big equity looking to upgrade, was much higher than what we had been seeing during the pandemic or before. So upgraders have been a really important trend in the market. That looks like it's probably starting to fade a little bit, to the extent that It's been very active in that market for sort of 2-3 years. A lot of those people that brought forward their purchase have done so. And so that tailwind is starting to fade a bit. And that's also consistent with the fact that price growth has started to slow down as well.
Are there any other predictions that you see for the market, for specifically Western Australia, but broadly for the national economy?
Yeah, I think that for my mind, investors are going to continue to be a really important part of housing markets for the next 12 to 18 months. While rental markets are starting to ease off a little bit and rent growth is starting to slow, conditions remain very, very tight. Rents are obviously a lot higher than they were 5 years ago. And so that's going to be an attractive environment for investors. And the fact that interest rates are falling is not going to hurt either. So investors, which are currently very, very active, big part of the market at the moment, I think that's going to continue for at least a little while yet. The other trend is, as we spoke about before, I think first home buyers, we're not seeing what we were during 2020 and 2021, but it is still higher than what we were seeing during the late 2010s. Again, consistent with rental markets being really tight. And so people, trying to move into home ownership about a bit sooner than they otherwise might. With a lot of federal government support coming in for first home buyers, I think that's going to continue to be important, though first home buyers are obviously a smaller part of the market than investors.
It's been amazing. Thank you so much for your time, and it's been really nice to chat, and thank you for sharing your insights.
No, pleasure. Thanks so much for having me.
Thank you for listening to Own It, Your Property Partner. Today we're speaking with Angus Moore, realestate.com economist, who is sharing a property update across Australia. If you found today's chat useful, share it, comment, or leave a review. That really helps us.